Thanks for joining us at XM.com. This is The Week Ahead. I'm Cristina Marujos. Joining me today is our senior investment analyst, Marios Hadjikyriacos. Marios, the RBA meets on Tuesday, and there is intense speculation that the central bank will raise interest rates again this week. What could that mean for the Aussie?
Hello, Christina. The markets are pricing this event almost as a coin toss, so the probability for a rate increase versus keeping rates unchanged is about 50-50. So that of course makes it more exciting for a trader. Now, the question is which outcome is more likely, Christina. Now, the Reserve Bank of Australia, I think, has more incentive to raise interest rates, and that's because of several factors. So last week, we heard from the RBA governor, and she stressed that they will not hesitate to raise interest rates further if there is a material upward revision to the inflation outlook. And the day after her comments, we got data from Australia showing that inflation surprised to the upside. Inflation was hotter than expected. Now, similarly, Christina, we've seen house prices in Australia rising, and they almost touched a record high in October. That's also inflationary because it can lift rent prices, and often rising home prices translate into stronger household spending. So, and of course, the labor market in Australia is quite strong. The population growth is quite high. So all of this suggests that inflation could remain high for some time, and it really argues for another rate increase. Now, there are some counter arguments as well. For example, the latest business surveys showed that economic growth will probably slow down as the year concludes. And of course, we have the conflict in the Middle East that's raising uncertainty. But most importantly, we've got this global wave of rising bond yields, and that has also spilled over into Australia. Australian yields are trading near their highest levels in a decade, and that basically means that the bond market has done a lot of tightening for the RBA, reducing the RBA's need to raise interest rates again. So what I'm getting to is there are solid arguments both for raising rates and for keeping them unchanged. However, I think that the case for a rate increase seems stronger based on the data and the RBA's own commentary. I think the governor last week was trying to send a signal that a rate increase is probably coming. So as I said, the markets are pricing this event almost as a 50-50 coin toss. That suggests that if the Reserve Bank of Australia does raise interest rates, that could help to boost the Australian dollar, at least briefly.
And Marios, before I let you go, let's cross into the United Kingdom. The Bank of England left its policy unchanged yesterday, but the pound was unmoved. Now, GDP data out of the UK on Friday will likely paint a gloomy picture for growth. How can we see sterling perform?
Yeah, so I think it's going to be a pretty ugly GDP report. We've gotten some monthly GDP readings so far. Those were pretty ugly, and business surveys suggest that the UK economy is really slowing down. Now, what's most concerning for me, Christina, is that the UK labour market is losing jobs. We saw a pattern of job losses from June through September, and at the risk of sounding overly dramatic, that's how every recession begins. So this is a big red flag for me. I'm really keeping an eye out on the situation in the UK, and overall, I think it's a difficult situation because economic growth is rolling over, but inflation continues to burn hot. That paints a stagflationary picture for the UK economy, which is bad news for a currency. And we've seen the pound retreat lately, and I think that the losses are not over, Christina, based on the domestic economic situation in the UK, and also considering that cable has a very strong correlation with stock markets, that leaves it vulnerable to further losses in case the stock market turns lower as the global economy slows down.
Marios, thanks so much. This was The Week Ahead here at XM.com.